Good morning, everybody. So, I want to talk about the topic on the topic forex market manipulation. Forex market manipulation. So, you may ask, what is forex market manipulation? Is it that there is manipulation in the market? Of course, there is, and there is manipulation from many quarters. The big players they manipulate the markets. Okay, because if you have a lot of money, you can manipulate even the forex and the crypto market. That's the truth. Because once you place an order or you place a demand or you make a supply, you place a supply, your order is going to move the market. Most time when you see that the market is not moving, is because these big players they've not actually come into the scene. Okay, so the first thing you have to know is what is forex market manipulation. So forex market manipulation occur when large institutions, market makers, or influential traders artificially influence price movements to benefit themselves. So let's now take a look at some of the forex market manipulation, okay? So that you can see them. Now, the first one is called stop hunting. Stop hunting. What does this mean? It means that market makers like banks and liquidity providers, they push the price to hit your stop loss order of the retail traders before reversing the price back in the original direction. Like yesterday, our stop loss was hit before the market started going back. Do you see that? That is what we call stop hunting. They call that stop what? Hunting. That means the market is always looking for where people place their stop loss. So I'm going to show you guys how you can avoid all this. That's why sometimes when I trade, sometimes I don't trade with stop loss. But if a lot of people know this strategy now, before you know, they will be reversing the market, they will be burning out people's accounts. Okay, so let's go on. So example, price suddenly spike to take out stop losses above resistance and drop back down. You see that? You know that most times people put their stop loss above the resistance or below the what? The support. That's where they put their stop loss. So, so what price does is it will reverse and look for where those stop losses are. Whether it is top or whether it is bottom, or price will reverse and go and clear all of them before it will now start going in its original direction. Those things will now serve as liquidity. Okay, now to avoid it, you place your stop loss slightly beyond obvious levels and use a wider stop loss. In short, sometimes when they say use a wider stop loss, you can use a wider stop loss if you're already sure that this market is going in a bullish trend, that's upward direction. There's nothing bad if you use a wider stop loss. Do you understand? But for me, that is still risky because it can go down as to hit that your stop loss. So what I do now is I will not place a stop loss, but I'll be monitoring the trade to know the level I can take. And most times it will not get to that level before it will reverse and I'll be in profit. So that's why the trading now is very, very difficult, because it's like I told you people the other time I did an audio that a lot of people are now knowledgeable. There are a lot of indicators like this smart money concept indicator. A lot of people are using it, so they can hardly make losses. So it now depends on how you can manipulate, your way out. Because the move you are making, all those people that are still putting stop loss and take stop loss, yes, not take profit at key level, your name is sorry. It will take you out, except your own is not significant. Okay, so let's still go on because this topic is a bit long. Another way they manipulate this forex market is spoofing. Spoofing, who does it? High frequency traders. These are people that use bots and also big institutions. Do you know most of these big institutions they use algorithm? That's the truth. Hey, you don't even know. They use algorithm. They move at very high frequency, more than what a normal human being can do. Do you understand? Even the fastest human being cannot do that. Now, what they do is that they spoof. Spoof is to give you a fake impression. They place a large fake buy and sell order to create a false demand and then cancel it before execution. You see that? You know, there's what they call order book in Forex. There's what they call order book. Order book is different from your chart. So when they place those things, those people that are using data from order book, they will be deceived. They will enter in that direction. You understand? Only for the market to reverse. It's more like a fake breaker, something like that. So a big buy order appears in the order book, attracting buyers, but disappear before execution. You know, that's what they do in the order book, but they cannot do that on the chart. So to avoid it, you focus on the price action on the chart instead of the order book movement. So don't focus on order book movement. Then there's other manipulation they do. This one is from the broker and liquidity providers. We call it slippage. Who does this? Is the broker. How? During high volatility news, brokers, they delay order execution, causing traders to enter at the worst prices. You see that? So your broker is killing you too. You see, we are trading against many forces. That's the truth. Anywhere money is, there are forces of darkness, you know. So, for example, you can set a buy order at 1.2500, but this order will get executed at 1.2515 due to slippage. The brokers, they used to do this. Okay. To avoid this, what do? You don't use the buy order. You use a limit order instead of market orders, and avoid trading during high impact news. Do you understand? Like when you use the buy limit, that means you don't just say you are using a buy order. Do you understand? But you say when price get to this, trigger this, instead of buying now. That's market order. You know, market order is you are using a buy order, like buy now. You are executing at the current market price. So what the people do during high impact news, they do what we call buy order, limit orders. Limit order means the market will be executed at certain price. Do you understand? It could be a sell limit order or it could be a buy limit order, but not a buy and sell order at market execution. Then again, there's what we call spread widening. This one is done by the broker and liquidity providers too. How? They increase the bid and ask price. You see that? Forcing traders to enter at unfavorable price. Example, normally the Euro USD spread is 1 pips. But during major news, it widened to 10 pips. So what do? Choose a low spread broker and avoid trading major news. You see that? So before you enter any market, check the pips, mostly Bitcoin. I used to notice that. And again, when the trading volume is very low, don't trade. You may be say, this thing is moving in a good direction, but nobody is in the market. You understand? That time the spread will be very wide. So that's why it's good you trade during the London and New York section, so that when the spread will be very low. If not, you are just, all the money you make, you are just making it for the broker, which doesn't make sense. So always check the spread. If you go to your chart, you will check those two lines that are moving, the red and the green, or the red, which color. There are two colors that are moving on that chart. Check it. If they are far apart, don't trade. Then the pump and dump news manipulation. Who does this? Is the big bank and institution. How do they do this? They create a hype around the currency before dumping it after retail traders enter. So you see that these people are always looking for a way to kill the small players like us. You understand? Like a central bank official hint at rate hike, pushing price up, but the price reverses when the big players have taken their profits. So what do? You wait for confirmation before entry after major news. So most time they use the news to hike it, but it's a fake one. Okay. Then time of the day manipulation. Now, this one is very, very important. Institutional traders, they do this. The price will move irrationally during the low liquidity period, like during Asia period, to trick the traders. Price now suddenly spike during the low volume hours, only to reverse when the liquidity return. You see that? Because when there are many players, it's very hard for them to be spiking price. That's all this week, all this long week you see. If the players are many, it's very hard. But that one they will be doing it because they know that there is no volume. So always check when you are seeing bullish trend, bullish trend. Don't be happy that it's a bullish trend. To check whether there is an proportional volume. So that's why you have to be checking volume. Volume is very important. If you are seeing bullish candle and there's no volume, my brother, run, oh, because the next thing there will be a spike. It will take you out. Okay. So what do you do? Trade during high liquidity section like London and New York section. That's why you see I do advise, don't worry about what the market does before that time. Just worry about what happened during the London and the New York section. Then again, when the London and New York section starts, sometimes they will also manipulate. You will now see the thing going in one direction only for it to change, because they know that a section just opened. So they want to manipulate the market at that section. So you wait first and know where the price is going. That's why I like this smart money indicator, because if they are doing all those manipulations, you'll be seeing it. You'll be seeing that price change direction. So, but I'm going to give you a strategy. Those of you that will listen to the end, I'm going to give you a strategy that I use with the smart money indicator that will make you to avoid all these price manipulation. Because I know we have more manipulation from the market, from the chart, than the one done by the brokers. Do you understand? Okay. So now, if you want to protect yourself from forex manipulation, you are going to use a reliable broker. That is a broker that is regulated, that have tight spread and no dealing desk. Any broker with a dealing desk, run, no, because you might just be trading against your broker. But thank God, SNES is not a dealing desk. Is a non-dealing desk, or what they call the ECN broker. So those ones too, they are happy when you are making money, but they are killing us through spread. That's just the truth. So avoid the time when the spread is too high, like at night. Avoid trading news spike. Wait for the price to settle. Now, though, when you want to trade news, like even FOMC, any kind of those news, NFP news, CPI news, don't trade at that time. Just wait. When the price has suddenly carried itself down to one direction, when it's not coming up, because it's going to balance up. If you are using your smart money concept indicator, you see it. As it's coming up, that's when you now enter the trade. Because the trade must always come back to the equilibrium. Okay. So these are the strategy I'm teaching people that are paying for my mentorship. Okay. It's not by force. Just 50,000 monthly. You simply call me on 0803-789-0428. So that you'll not be making losses. All these things. Knowledge is power, my brother. Then again, you trade with the trends, not against smart money. The trend is the smart money. I like the smart money concept indicator, because you will be seeing the trend. It's very clear. It's not like the one you not be seeing trend. This one you see the trend clearly. And if you want to see trend clearly, even if you go to your chart, if you look at the 4 hours, 1 hour time frame, you see the trend. That's the truth. Not anything lower. Then if you want to now enter the trade after you've seen the trend, okay, let me leave that. After you've seen the trend, then you look for the lower time frame. Okay. But I think these days the market usually support a lot of scalpers, because scalpers can just go in and come out, before the thing starts. And this smart money indicator is good for scalper, because as the trade is approaching the equilibrium or approaching discount or premium, you opt out, or approaching an order block, you opt out and wait for it. Do you understand? So let's just go. I'm going to now give you details now. Now, in stomp hunting, how do you identify a stomp hunting? Price move sharply towards key support or resistance level. Do you see that? All those your support and resistance you are marking, price is targeting it. Okay, so you see a quick spike beyond that level. What is it doing? It's trying to target your stop loss. It has been doing that to a lot of us that are taking signal, and they've been worried, So what do you do? There's immediate reversal. After it has taken out those stop loss, as I told you, this system always look for money, liquidity. After it has taken out the liquidity on those major key levels, major support and resistance level. So sorry for people where they trade support and resistance, they go finish. So after price has taken you out, before price will start moving in the direction it wants to move. So those are the things we see from the smart money indicator. We just wait. After the thing has done all those dangling, we know it's a dangling. Mostly when you want to start moving fast, We know that is what it's trying to do. Then later it will reverse. Okay. All right. So for instance, if Euro USD is ranging between 1.1000 as support and 1.10,000 1050 as resistance, let's say it is ranging between that price, like what gold and BTC they are doing now. Now, suddenly, these are the hunt for stop loss. So you know that, okay, the support for Euro USD is 1.1000 and the resistance is 1050. Suddenly, the price will break below the support, or it will break above the resistance, whichever way. Do you understand? And it will trigger stop losses. When it bounces back, then it will bounce back sharply, leaving trap traders. Now, how do you avoid that? Don't place stop losses exactly as support and resistance. Give it a bit of breathing space to make your stop loss far away from that support and resistance. That way, you will not be targeted, because that's what the thing is always looking for. It's only looking for stop losses so that it will use it as liquidity. So you also wait for a confirmed retest, because when a price break out, it doesn't mean it's going to go in that direction, in the other, or the direction has changed. It may mean that it's going to retest. If a price doesn't retest, don't enter the trade. So you wait for the retest. If a price break upward, it will come down a little before going up again. Do you understand? Even these days, it's doing many retests. So traders are just confused. God will help you. You understand? But we are seeing this all from the smart indicator. Okay. So you wait for a retest, before the price will start going up. Okay. So that you confirm. Now, fake breakout. Now, what to look for? For a fake breakout, what you do, this is what you notice: your price will break out of a range of or a trend line, but it quickly reverses. High volume on the breakout, but no follow through. A long wick, that is fake breakout candle form. All these long wick suspended, they are fake breakouts. It's not all of them that are rejection candles. Now, for instance, if GBP USD break above 1,000 to 1.2700 resistance, attracting buyers, suddenly price dropped back below 1.2700, trapping breakout traders. So how do you avoid this? You wait for a pullback and retest. Price will pull back and price will come back. That is like a pullback 2 times. Price will pass that place direction. It will come back to it. Then it will come back again to retest it before it goes. So don't just jump that, this thing don't break, and it will continue to go up. You wait for a pullback, before that will confirm the breakout. You check the volume, make sure that there is a re-breakout. Usually breakout usually have strong follow through. That's if it's a re-breakout, you see a volume that will commensurate with that. Then again, spread widening, how to detect it, what to look for. The bid and ask price, the bid and ask spread become usually wide. That's one thing you notice in the chart. Your trade is entered far from the expected price and happen mostly during news event or low liquidity period. So that's why I said the first thing is don't trade during low liquidity period. Okay. Now, normally Euro USD spread is 1 pips, but just before NFP news, it widens to 10 pips, stopping you out. So that's why you should avoid trading during this news. Okay, so how to avoid it? Check the spread before placing a trade. Very important. Mostly those people that say, I've seen this thing is going in this direction at night. Please avoid it, because if you check the spread, if it's too much, don't enter. Avoid trading major news events unless necessary. Now let's go to the pump and dumps. How to identify what to look for. Sharp move in one direction and a major news before a major news release. Like if the NFP news is coming, you just see sharp move in one direction. Then after that, reversal immediately after the news come out. Institutions taking profit while retail traders get trapped. So that's why, for example, let's say before the FOMC gold SAU USD rallies, news is positive, but price dump hard after. So what do you do? How to avoid it? Don't chase price right before big news events. Wait for the news reaction and trade the second move, because anytime there's a news and price going in one direction, it's always going to, after the news, it will always restore itself, come back to the equilibrium. But you see all this from the smart money indicator. That's why I keep talking of this indicator. You will master how to use it from me, then you will not ever lose any trade. Then time of the day manipulation. When does it happen? What to look for with price spike in low volume section, Asian session. So during Asian session, we don't expect a spike. But if there is a spike, is a fake, is time of the day manipulation. They are manipulating during the Asian session. Okay. Sudden move before London open or New York open. I said this before, that before London market wants to open, you just see sudden move, or before New York. Please don't trade that time. Just watch. Let the thing settle down. They are just fake prices. Price fake a trend before reversing. All this, you will see it. So once a section is opening, like Asian section is opening, New York section is opening, calm down first. Understand what the market is trying to do. Don't just jump into it. Like for instance, during Asian session, Euro-US is slowly trend up. London opens. Okay, London open, price suddenly dump, trapping Asian sessions buyers. How to avoid the trade during high liquidity period, London and New York. Avoid placing trade during session overlap if not sure, or even at the start of a session. Okay, so as I said, I want to show you guys how you can avoid all these many issues, especially those ones that have to do with price action that you see from big players manipulation. Is to trade with other block. Smart money concept. Do you understand? You will be seeing the other block. You will see bullish other block, bearish other block, internal bullish other block, internal bearish other block, fair value. You will see all this here on your indicator. You will be seeing the change of characters. Both the one that is bullish change of character, bearish change of character. These are the things you'll be seeing. Once you are seeing too many change of character, the market is unstable. Do you understand? But if you are seeing more of a change of character that is bullish, it's a sign that that's where they may likely move the market to. Or you are seeing change of character that is bearish, it's a sign that that's where they may move the market to. But you have to wait and confirm, And all these things, what you need to do, you need to understand the way the trend is moving, the pattern the market is forming. And what I normally do is that I use the 1 hour chart, I use the 30 minutes chart. Sometimes I use the 4 hour chart. The thing is that you use this higher time frame to understand the pattern, because there is so much disruption and noise on the lower time frame. You understand? So the secret I'm giving you now, which nobody will tell you, is this: once the lower time frame and the higher time frame match, is a good go. Do you understand? If the pattern you are seeing, the trend pattern you are seeing, or the confirmation anything that you are confirming matches with 1 hour, with 30 minutes, is a good one. Or even with 4 hours, better. The higher the time frame, the better, is a good one. But the only thing why I don't want to use 4 hours, because I don't want to be waiting for a long trade, because I'm a kind of intra-day trader. You understand? So I don't want, or even a scalper, better scalper than even intra-day. So I don't want to wait for too long. So most times I'll just use the 1 hour, because most of my trade don't usually exceed 1 to 2 hours. Then I use the 30 minutes, So when the 30 minutes and maybe 15 minutes saying the same thing with the 1 hour, is a good sign that that thing is confirmed. So this is how you confirm. So sometimes you may see in the 1 minute chart, you may see that this trade is going up, But when you go to the 30 minutes or 1 hour chart, you see that it's a downward trend. So it's not confirmed. So that is a fake bullish movement. But if that bullish movement is not confirmed on the bigger time frame, is a good sign. Do you understand? So these are how many traders they do. They try to confirm things from both the higher time frame and the lower time frame. That way, all this manipulation we talked about, you will hardly fall victim of them. That's the secret. So I use multi-time frame to confirm most of my things before I go on to place a trade. If you do that, you will hardly fall victim to trend reversal, fake breakouts, spike, and all this stuff. Then again, another thing I do, I don't use stop loss. What I do, I use small account. Like I use my $50 account. If it blows out, I can recover that one easily. but I know it most times it doesn't blow out. Do you understand? Instead of you putting 1 million, $200 in one account, why not split the account $200? Then avoid using stop loss. Yeah, but then you are sure of the direction. You have calculated, know that even no matter how this thing will go down, it will not burn my account out. So these are some of the strategy I teach. So please ask me question. We are going into crypto. Crypto and forex, they are the same thing, just basically the same. You understand? But you need to understand something. Crypto even will give you better money, because especially now that we forex trader, we are kind of resting. Crypto will give you, because a little appreciation in crypto, I tell you, in future trading, you've made some good money. You understand? But the only thing, crypto is always back with community, fundamental. There's so much, in forex trading. We use a lot of technical analysis, you understand, than fundamental analysis. But in crypto, you will use more fundamental than technical. Like the community that is following the crypto, that particular crypto you want to buy, matters, when the launch date is coming and all those stuff. So crypto kind of move more with fundamentals, do you understand, than technical. Why forex move more with technical than fundamentals? I'm not saying fundamental doesn't affect forex. It does, but supply and demand, fundamental like news and all those stuff, they affect more of crypto. They still affect forex, but for crypto, we are going to be doing more fundamental than the smart money concept there, than what we are doing in forex. The only time we worry about forex fundamental is when there is going to be news. If not, nothing. The crypto, you need to look at the community following it, how the coin is doing, the programmers and the rest, what people are saying about the general opinion of it, and stuff like that. That one is harder, bigger on crypto, so that you don't buy a shit coin, a rock pool. Okay? So let me hear your take. Okay? Contact me on 0803-789-0428 if you want mentorship. I'll guide you on this. It's just 50,000 naira. You'll be happy that you have what it takes in your hand to deal with the crypto market and the forex market. Thank you.